All right, guys, this is Chris Trade, and I've been asked to do a review onto uranium mining companies. This is a spin-off from my uranium video. If you haven't checked that, please go check it out. The link will be in the popping up quite soon. If it hasn't, it's going to be popping there. So go check it out. But I had Herman said maybe do a video on Lotus Resources. They have a mine and production facility already. I am subscribed now. Thanks for your video. Herman, thank you very much for subscribing to my channel. It is much appreciated. And another one from Bumal Sum. I hear great things about DNN. Could you do a video about DNN? Well, if you don't know the ticker DNN, that is the ticker for Denison Mine. Okay, guys, with pleasure, I would love to do a review on these particular stocks. And yeah, perhaps these are two stocks that you could look at add into your uranium portfolio, your uranium mix. So without further ado, let's go and have a look. Okay, so we're going to jump into Denison Mines Corp first. And just very quickly, looking at their graph, you can see they're still pretty much far off from their all-time high. The reason for this particular dip is that was due to the financial crisis that happened globally. And then they did try and make a recovery. And then if you have a look here, well, 2011, that was Fukushima. That really didn't help the uranium and nuclear cores, and that went all the way down and carried on going down. Pretty much from 2015 onwards, it just really stagnated. And then from 2020, it started going up and up and up. So if you managed to get in 2020, about a year ago, you would have made about 150% in your returns to date now in terms of your stock. So that is phenomenal. That's actually really good. I want to get under the hood now and find out what is ticking with Denison Mine. And one of the first places that I go to is to have a look at their financial statements. I want to know, are they profitable or are they trading at a loss? Have they got cash in the bank? How much assets do they have? All of this I need to understand in terms of whether this is going to be, if it's run healthy and whether, you're going to make money from this as a viable investment. If we have a look here, for the past 3 years, they have, from a total revenues point of view, they have actually gone down. And look, I'm not going to be too harsh, particularly for 2020, because, you had the pandemic, they had a shutdown. So I'm not going to be too harsh, really, on these figures here. For the past 3 years, they have been running a net loss. What is encouraging to see is they have been reducing their net loss, which is encouraging to see. So a bit of a plus there, but also, unfortunately for the past 3 years, they're running at a net loss. So if we have a look, cash in the bank and the cash equivalents, it's gone up for the past 3 years. So this is good. It means it's got money in the bank. It means that they can run another year at a loss. Okay. And if we have a look at their total assets, their working capital, and this is also going up, and this is slightly down a bit, but their total assets it's good. So if they ran, a couple more years at a loss, certainly they'll probably look at selling some assets and to keep the company afloat, which is good to see. Obviously, you don't want companies to be in that situation, but it is good to see that they've got money at the end of the day. So that all bodes well from a financial point of view. It is as healthy as you're going to get right now. So it's not too bad. Right, another analysis that I want to have a look at. This is from Simply Wall Street. If you don't know Simply Wall Street, I highly recommend you go and check the website out. They do quite nice little detailed analysis on specific companies, and it is free. I mean, they've got plans and stuff like that, but the information that they provide from the free side of things, it's pretty good. So go check the website out. I'll actually put that in the link in the description. So they also kind of concur from a health point of view. It's pretty good. I mean, if I just click here, where'd it go? There we go. Their financial health. So does the company have strong financial health and manageable debt? The total score, a 5 out of 6, would confirm, yes, they've got strong financial health and they are managing their debt pretty well. That X that you see there, that has to do with their long-term debts that they have, but that's something that they pay off. Some are like after a year that you got to pay it off. Some would be 5 years or 10 years, whatever the case is. So they do have long-term debt, but it seems to be quite manageable. But there are 4 risks associated with Denison Mine currently, just as the financial report spoke, currently unprofitable and not forecast to become profitable over the next 3 years. Now, I already showed that they've got money to sustain them for a year, cash in the bank. However, they're going to have to probably look at selling some assets just to carry them through. Perhaps try and get more investors, selling off some shares, whatever the case is, to try and generate that money. But having said that, they are opening other markets, and a lot also has to do with how the uranium market in its totality, the nuclear market in its totality over the next 3 years is going to increase. 3 years is still, it's a lot of time. You got to understand that Europe, they're looking to put nuclear on their green ticket or their green list. So that will ultimately bode well for uranium companies like Denison. Canada is investing quite heavily in terms of new technology and nuclear power, in terms of your SMRs, which is small modular reactors. The US has included nuclear power into their planning. Africa is looking more into uranium. Asia is looking more into uranium. So overall, there's going to be a demand, but there's not going to be enough supply. So this could potentially bode well for Denison Mine. Volatile share price over the past 3 months, significant insider selling. That really has to do with like the board of directors, the corporate guys selling their shares internally to some other board members. So I wouldn't really worry too much about that. Shareholders have been diluted in the past year. Again, I wouldn't really stress too much about that. It's just really the financials that I wanted to have a look at. From a financial point of view, they are healthy, but there is a risk that they could still maintain being unprofitable for the next 3 years. But again, this all has to do with the demand for uranium. Okay, so we scroll down. We have a look here. Again, if you invested a year ago, you would have made 146%. It's really great. So, it's as a shareholder or someone who's owning these particular stocks, 146% return, that's good. That's really good. Okay, we're going to move on down. I just want to go to ownership here because I want to show you guys something very interesting. If move a little bit down here. Okay, so this is Korea Electrical Power Corporation. Now, this is a South Korean entity. If we go here, have a look here. So this is who they are, KEPCO, and they actually supply 90% of the electricity to South Korea. And I also discovered that 50% of the shares is also owned by the South Korean government. Okay, so it's a parastatal at the end of the day. And that is a very interesting partner to have on board for this company. And I think it's really good because they've obviously got nice access into the Asian market. And the fact that they, tie in with governments, they've tied in with a electricity power provider to a nation that dominates over 90% of its electricity needs. That's pretty good. That tells you there's a nice stream, there's a nice market there, ultimately, for Denison Mine. So this was really nice to see. I actually quite liked seeing that. So that's a good green tick for Denison Mine. I just wanted to show you. So nuclear power in South Korea. So there's about 24 reactors, provide about 1/3 of South Korea's electricity. And then South Korea is amongst the world's most prominent nuclear energy countries. So you can see why the governments and this particular company did end up owning or buying quite, some shares within Denison Mine and effectively being a very nice partner for Denison Mine. So as I mentioned, this bodes well. This is really what you want to be seeing, things like this. So, it gives them a nice little monopoly in terms of South Korea. And as I said, this gives them a fantastic stepping stone in terms of breaking into the Asian market. So it's very nice to see this. If we have a look, I just want to go to their actual website. So this is one of their projects, the Wheeler River project. They've got a number of operations, but this seems to be the latest one where they are getting very excited, and I think the market's also getting quite excited about the Wheeler River project. This is in Canada. They apparently are sitting on some very high-grade uranium, which also bodes very well with Denison Mines. And this seems to be in the region of northern Saskatchewan. Okay, I am so sorry if I butchered that. I'm not Canadian, so I'm not used to seeing those type of names. But I'm sure I pronounced that correctly. Saskatchewan. It's quite a cool name. But yeah, so that's pretty much where they're operating. It is in exploration phase. So unfortunately, with the pandemic that happened, it did delay this particular project for a bit. But it looks like they're getting back on track. You know, it's a very nice uranium project that seems to be on the go, yeah, Wheeler River. And the fact that they're sitting on some high-grade uranium, I mean, that's pretty good. Yeah, check out 2 high-grade uranium deposits. So, I mean, the market's here for them. The only risk, and it's a risk with my investments that I've had in Cameco, and I'll quickly compare the two, but the only major risk with all of this is, you know, the world decides, no, we cannot go nuclear power at all. Why didn't I invest in Denison Mines? Because look, on the surface, it is still a very good investment to make. The only reason why I didn't invest in Denison Mines and why I went for Cameco, because Cameco is really like the daddy in terms of uranium mining, and Denison Mine does not pay dividends. So for my investment strategy, dividends are very important to me, hence why I went for Cameco. Even though Cameco's dividends payout it's pretty crap, but nonetheless, dividends is dividends at the end of the day for me. So that's why I went with Cameco. And the only difference really is that Cameco, which is still also trading at a net loss, but over a 5-year period, they're actually trading at a profit. If that makes sense. So that's why I went for Cameco. But that doesn't necessarily mean that Denison Mines is a bad investment or not a great investment for your investment strategy. Denison Mines is still a great stock. I'm not going to bash it. It's still a really great stock that if you invested a year ago, you would have made about 140% Come on, it's good. Okay, so the next one we're having a look at that I was asked to review was Lotus Resources. Now, I tried to go on their website. Unfortunately, their website's not working, which is a bit of a shame. I would have liked to have seen a little bit more about this company. So Lotus Resources is a Australian-based mining company. Now, they did have some mining assets in nickel and things like that, but they've actually sold that off, and they are purely and only concentrated now on uranium mine. In fact, they only have one asset, and this is a particular mine in Malawi, which is called Kaya Elekera uranium mine. Now, Kaya Elekera was actually owned by Paladin Energy, another uranium Australian-based company. But they actually sold this to Lotus Resources, and Paladin Energy is now focusing purely on Langer Heinrich uranium mine, which is based in Namibia. And what you'll discover is with Kaya Elekera, the mine is owned about 20% by the local Malawi government. And there's about, I think, 14% is owned by a local company, and then the rest, the majority, is owned by Lotus Resources. So again, that also bodes very well. They're in bed with the government, and I know what you think. It's Africa and governments are corrupt and things like that. Malawi's not a bad country, actually. It's fairly stable, irrespective. I mean, you're in bed with governments. There's more high-grade deposits around that area, which they are going to be exploring. They've got easy access to that. They will get rights to that because the government's going to have shares in all of that. So, I mean, that just opens up the door for them to literally have the whole of Malawi uranium in the palm of their hands. I mean, what else do you want at the end of the day? So they are currently trading on the ASX, which is the Australian Stock Exchange. That's the only stock exchange that they are currently trading at. However, you will find them on the over-the-counter markets. Now, they are part of the OTC QB. They've been a member. So this is just recent, actually. This is this month members since May. They were verified last month. So the reason why they did this is to try and get now Americans to look at investing in this particular Australian company. So they are very much a junior miner in uranium itself. So there is risk attached to it. Now, OTCQB is kind of like a level above pink sheets, which is like your penny stocks. There's a stricter criteria. So it makes it a little bit less risky than what it would be with penny stocks or pink sheets. As a foreigner, if you're not in Australia, but as a foreigner, you can get in touch with the brokers listed by OTC Markets in order to look at buying some shares in this company, or if you can, try and find a broker in Australia. I actually really do like this stock simply because of the potential for some reason. And if we have a look at their price, I mean, it is dirt cheap right now. If we speak back to the mining operations that they have in Malawi, the mining operation hasn't really started yet. And Paladin actually handed over a really good mining operation. There wasn't much for them to do repairs and maintenance and things like that. So pretty much they almost got a pristine mining operation, which is actually pretty cool. And for them to get started will be a hell of a lot quicker than trying to, go and do explorations and, do all of drilling and all of that, those type of things to get into feasible studies, and then past that into getting into some sort of a small little operation and then building, because that entire process takes almost like 10 years. And the fact that they've just bought an entire mine that's pristine, I mean, that is really, really cool. So that bodes extremely well with regards to Lotus Resources. So they're not in operation just yet, but they will be soon. And I can tell you now, this is going to go parabolic when the demand for uranium comes into play worldwide due to the green energy needs. And I just want to quickly go through to the manager. So this is Keith Bowles. Now, he's the managing director of Lotus Resources. And Keith Bowles is actually a South African, and he's got about 21 to about 25 years worth of experience in the mining sector. In fact, he was the board of members for Matador Mining. I believe this is a Canadian-based company. He received his education at KwaZulu-Natal. This is what I like to see. Again, this is another green flag for me, another good tick. And I suppose you can take this from a little bit of bias because I am South African. But when it comes to mining, and particularly in Africa, get a South African, okay? They know their stuff, particularly when it comes to mining, and particularly when it comes to mining in Africa. So this was a massive power move here, hiring this guy. He comes with bags of experience, so he's got fantastic pedigree. He's South African, he's African, he knows the African markets and mentality and, things like that. And at the end of the day, if you're going to run a mining operation, get a South African. I mean, South Africans boss mining, hands down, compared to any other nation in the world. They will snap up a South African to run their mining operation. It's in our blood when it comes to mining. So this is a fantastic green flag for me. Yeah, from what I can see with this company, again, they're not running at profits. In fact, I'll speak to that right now. And this is the executive summary. So overall, financially, they're pretty good. But again, they score about a 3 out of 6 here, and there are some red flags. So they make less than $1 million in revenue. So you got to remember, they've sold off assets now, and they're holding on to an asset that they've still got to get into production now. Okay, currently unprofitable and not forecast to become profitable over the next 3 years. So there's your inherent risk that you've got, and then volatile share prices over the past 3 years, and then significant insider selling over the past 3 years. So again, I'm not too phased with this. I'm not really too phased with that. Of course, currently unprofitable. But again, this speaks to the doldrums of where uranium actually has been. So this is why everyone's getting quite excited now to the uranium bull run, because these guys will then end up, as soon as they get into production, they will end up be getting quite profitable. So this I wouldn't really worry about too much. You treat them as junior miners in this sense. And the best way to trade these type of stocks is you only put in a little. And then once they reach their milestones, you put more in. And then they reach another goal, you put more in. And they reach another goal, then you put more in. So you ease your way into these type of junior miners. And that's the only way to protect yourself from getting completely hurt, or if this goes completely tits up. I really like Lotus Resources. I actually want to see how I can get in terms of buying some shares in here, because I think it's dirt cheap. And I think the fact there's a lot of fundamentals that is stacking up with regards to Lotus Resources that I really like. So for me, I definitely want to look at taking a bit of a bid on Lotus Resource. So guys, I want to thank you very much for recommending me to have a review on Denison Mine and also on Lotus Resources. I hope the information that I've given you should help you also go and do your own investigations and see if this is something you also want to add into your portfolio. But yeah, definitely Lotus Resources. I'm actually quite excited about that one. So yeah, guys, this is Chris Trade. Peace out.